I think last time we spoke, you joined us here in Bloomberg was, I guess it was 4 months ago. How has business changed since then?
Business for us, in terms of electricity demand, has been reasonably stable. We've seen a shift in the way electricity is used away from commercial establishments and more to use in the home. And of course, data centers have been thriving over the past few months. But our challenge has been more keeping our operations running reliably, keeping our people safe, and importantly, getting on with some of the important projects that we have to help decarbonize Hong Kong.
Right, and part of that, as we mentioned, I guess, in the intro, bringing you in here, is you guys freezing electricity tariffs for next year. Tell us a little bit more about that.
Well, we've done everything we can to keep our electricity prices as affordable and as low as we can. This year was a year that we shifted substantially towards natural gas as a fuel, and we saw a 20% reduction in carbon emissions as a result of that shift. Now, fortunately, that has come at a time when pressure on gas prices has eased, so it was enabling us to make a very substantial shift to give a better environmental performance without needing to pass the cost on to customers.
Richard, Tom here in Beijing. I wanted to get your views on this target that Beijing has set itself for carbon neutrality by 2060. How do you expect that to change the energy space?
Well, having clarity and predictability on climate policy is so important for the energy industry. We take a very long-term view. We're investing today in assets that will see us well past the 2060 timeframe. So having that predictability in a clear climate policy is so important so that we can make the right decisions today. I think China setting that target will send a clear signal to the industry. All through Asia, where CLP operates, we are seeing climate policy coming to the fore. In economies where we are seeing a clear policy, it's enabling the massive investment that's going to be needed to transition our electricity sector from fossil fuels to carbon-free forms of electricity production. And if electricity can decarbonize quickly and early on, then that enables other industries to start using electricity as a way for them to decarbonize. So these signals are incredibly important.
Okay, so what are your investment priorities for mainland China when you look at solar, wind, and offshore, and how are you factoring in what we're seeing in terms of the subsidy space here, which is becoming less generous?
Essentially, the cost of renewable energy has fallen to the point where subsidies are no longer needed. Some marginal technologies, such as offshore wind, still need some subsidies to help them reach the economies to match grid pricing. But essentially, for mainstream onshore wind and solar, it is possible to build projects that are economic and can match the tariff that would be normally set by fossil fuel prices or coal in particular. So our approach going back to 2007 has been to invest in solar and wind on the mainland, and also nuclear power. So that really forms the cornerstone of our business in the mainland now. We've seen there'll be no more coal investments from CLP, and we'll basically be managing the existing coal assets that we have in our portfolio, which are reaching the end of our life. But the new technologies as well that are capturing our interest are technologies such as offshore wind, which we think is reaching the point where it is becoming economically attractive.
So, Richard, I guess as a follow-up to that question from Tom, do you have a specific figure in mind as far as Capex? How much is all that going to cost you over the next couple of years? And do you actually have specific capacity targets for things like wind and solar?
We do. Our priority at the moment is our Hong Kong business. And we are investing in gas generators and also an offshore LNG terminal for our Hong Kong business. We're looking at nearly 20 billion Hong Kong dollars of investment over the next few years in total for those projects. Now, gas is not zero carbon, but it will enable Hong Kong to move from coal to cut its emissions in half and to really give time before some of these zero carbon renewables and nuclear technologies can be made available to Hong Kong. So that's an important part of our Capex investment. What we have left over after that is really being spread around our business in mainland China, India, and also in Australia. Again, whatever Capex we are investing in zero carbon businesses so that we can transition our own portfolio and support the economies where we operate to make that energy transition.
Richard, what are you looking at then overseas, beyond Hong Kong, beyond mainland China? What are your priorities? Which countries are in focus for you? And where might you pull the trigger on investments or deals?
We operate, aside from our business, our core business in Hong Kong, we have investments in mainland China, India, and Australia, a little bit spread around Southeast Asia, but China, India, and Australia are our three core businesses. Each of those are going through an important energy transition, and really it's a matter of maintaining the diversity we have in our portfolio. We don't like to be too biased towards any one particular economy, but all of them are needing to go through an energy transition. All of them have good opportunities for investments in different areas. In India, it's renewables and also the transmission systems that will be needed to support taking renewable power from where it's generated to the cities where it's used. In Australia, there is massive investment going on in renewables. So it's investing in the storage and the fast response gas technology that will enable more renewables to be taken into the system. And in China, our focus is on renewables and also nuclear power.